Hey, what's up, guys? Now that we got the broader market analysis for the week out of the way, I wanted to transition over to the next topic. Maybe talk a little bit about gold, gold commodity, as well as gold miner stocks, and then at the end we'll finish off with some Bitcoin analysis as well as my take on Bitcoin. So real quick, we did acknowledge the volatility spike or the a huge amount of red in the markets this week, especially today's trading day, Friday, March 22nd, 2019. Um, it's looking really scary. And so when things look really scary, I tend to hedge in different ways, whether it being buying puts, shorting the markets, or looking at gold. And so today we're going to look at gold. So pulling up the futures chart over here on FinViz, if I were to transition over to the gold chart right here, this is what I'm seeing. For the daily, what do we see? What do I see in gold? So for my investment club, we started to look at gold pretty seriously around the November timeframe. So this was a time frame you were to look at indices, the markets pull back pretty heavily, or started to pull back pretty heavily. It didn't really take off until December was when the markets really dipped, and that's when gold really rallied, right? So we started analyzing gold around November time, just because I felt like this might be a repeat of like February of 2018 where the markets also dipped. And so ever since then, we held position all the way until March. And then this dip right here, this huge red candle, that kind of shook me. Though I held through and it retraced a little bit, and if I recall correctly, we took profits around here. My take was that yes, it retraced back up, set up like a ascending, broadening wedge, and I felt that gold commodity or gold futures were kind of hitting a seasonal or cyclical seasonal, and I thought it would decline a little bit further, maybe even to like 1200, right? So I did take position off here, and this would be in gold miner stocks. But now after post FOMC meeting and the way we guided interest rates or monetary policy, the way central banks guided monetary policy, I do feel that the position in gold has been reinitiated. So I guess you could say I got bearish around here, took my position, or took position off, and now I'm looking to get back in, or at least add on even more. The first day after the FOMC news and the direction they gave us on where they see interest rates going, got me excited about gold again, and maybe a little bit on Bitcoin as well. We'll talk about my view on that towards the end. So that's gold futures or gold commodities for you guys. What I see for the chart. If we were to zoom out, bigger picture, what do I anticipate? Gold is. If you look at a weekly, gold's been stuck in a very long-term consolidation right here. So it looks like this price right here, 1350, or even up here, 13, maybe even 1400 is very critical for gold. And I'm looking for gold to break out to the upside, right? That would be a very good bullish signal to see. But for now, if you analyze like the bigger picture of things and why I think gold might be a great hedge for this coming, let's say if this is really a coming recession, right? Knock on wood. If you look at 2001, 2002, we had a recession. Gold went up, and then if you look at today, or not today, 2008, 2009, again, gold went up. And so for the longest time since 2013, gold topped out around 2012, dipped, and now we have sort of a rounding bottom, I say. It might be setting up to go even higher. So this is what I'm sort of anticipating right now in gold. I do feel that broader markets are getting a little heavy, so getting a little bit scary. And so that's my reason or logic behind looking at gold. So if we were to go in and start looking at gold stocks and me telling you which one I'm sort of analyzing. There are a lot of gold miner stocks. So what we're looking at right here is the list of all the gold miners in the publicly traded markets right now. Uh, I mean, there's on the list of about 40. You might not be able to invest in all 40, but a great initial solution if you want to look into it is probably GDX. GDX is an ETF that will give you general exposure to, I would say, the major or the main gold miners, right? And if you want the junior gold miners, you have the GDXJ right here. This will give you exposure to the lesser or the junior gold miners. But for me personally, I like to handpick them myself. I won't look at all of them, but I'll pull up some of the ones that I personally like right now. So GOLD, NEM, AEM, GG, KL, ARGOLD, I like that one too. AU, I like that one too. KGC, AGI, and so forth. So there's probably a few more that I like, but I'm just Gonna go over these real quick. That's quite a bit that we have right here. So let's look at gold, GOLD. So this is probably one of the biggest one, or this is the biggest one out there, Channel Island. So this one's looking like it's setting up to go higher. It's looking very bullish. We got a pattern right here. So automatically drawn by FinViz. So I like that. This is looking bullish. Again, guys, this is Barrick Gold, the biggest gold company out there. After their acquisition of, oh, I can't remember which security it was. Uh, I gotta go back to that one. But anyways, I like this one. And again, this is all for educational purposes only, not a recommendation. Another one I do like is NEM. Now, this one's pretty interesting. NEM actually acquired this one, GG or Gold Corp. This one I was pretty bullish on, but now by default, I have to look at this one. I like this one now because it's now the owner of this one. So we could, I guess, eliminate this one off the table. What do I see for NEM? NEM's looking good, a lot of choppiness, but I think if one could really take a step back, be patient, I think this one has substantial upside as well. And again, guys, not educational opinion only, not a recommendation. AEM, this is another one that I feel would be a institutional favorite. What I see so far is that it's still respecting the 50-day moving average, so I'll continue to be looking at that one. KL is a high-flying momentum gold miner stock. Reason being is that they actually have ownership of a high-grade gold mine, and so this one's looking very popular. I sold probably, you might not believe me, but I probably sold around right here and I wanted to wait for a dip. I didn't buy this dip, but I actually bought this dip at the 50-day moving average. So I have repositioned in. This was on Wednesday based off of the FOMC. Speaking of FOMC, I did forget to show you the daily chart on the FOMC on gold, and this is basically what happens. So this is the daily chart right there. So we had FOMC meeting on Wednesday. That's around March 20, and this is the chart right here. Right, gold spiked, and then the next day retrace. I'm anticipating higher it goes, maybe, right? Hard to say, but that's the thing about trading. Everything's all about probability. Moving on to the next one. So we looked at KL just now. I do like this one as well. This one's setting up a rising wedge, though rising wedge could break down to the downside, so be cautious of that, but it is above its 200-day moving average. A lot of other ones, to look at, maybe going too in depth. This video is already about 7 minutes, so with that, just showing you the other ones that might be interesting. AU, KGC, AGI, and that's about it. I don't want to get too technical or too long on this video, but as always, guys, thank you so much for watching. See you next time.